Hello, so today we're going to do problem 2-3b, journal entries and trial balances. On October 1st of 2014, Jay Pryor established an interior decorating business, Pioneer Designs. During the month, Jay completed the following transactions related to the business. So then it lists our transactions, excuse me, the transactions from October 1st till October 15th will go on page 1 of our journal. 21st through the 31st will go on page 2 of our journal. Our instructions, number 1, journalize each transaction in a 2-column journal beginning on page 1, referring to the following chart of accounts and selecting the accounts to be debited and credited. Do not insert the account numbers in the journal at this time, and journal entry explanations may be omitted. Now, let me make something extremely clear. When you are journalizing entries, the only things that can go in the account title column are the account titles that are listed in the chart of accounts. You cannot make up accounts. You cannot use wording that doesn't match the chart of accounts. The account titles that go in the account title column have to come from the chart of accounts. Okay? This also helps you because it gives you hints as to how to answer the questions, as to how to journalize those transactions. Okay. Number 2, we're going to post the journal to a ledger of a 4-column accounts, inserting appropriate post references as each item is posted. And I'll show you guys how to do that. And step 3, prepare the unadjusted trial balance. Okay, here we go. So again, we're going to start here by journalizing the transactions. So we're going to pull up our journal. If you are working on a one-screen computer, you may want to either print out your problem or you may want to pull it up on a different device on your cell phone or something like that so you can see both things at once. Or you can split screen them, and I'll show you how to do that. So if I make my problem so it's not, excuse me, maximized, I have like a frog in my throat today, I'm sorry. Then I can put it next to my journal, and that might be the best bet for this one, okay? And the same with your Excel worksheet, you can move that over. Okay, so our date is October. Oh, we need the year first, so it's 2014. A little Excel reference, after I typed in the 2014, I held down the Alt key, ALT, and pressed Enter, and it made my insertion point just go down one line, but stay in the same box. Okay. So October of 2014 is my first entry, and it is October 1st. So 1 goes in that box. Jay transferred cash from a personal bank account to an account to be used for the business in exchange for common stock of $18,000. So Jay Pryor has invested $18,000 into this business, and he is in turn receiving some common stock. Since he is putting cash into the business, that means we're receiving cash. Whenever we receive cash, we're going to debit cash. Okay, as we learned in the PowerPoint and in chapter 1, we have these debits and these credits, and cash is an asset, and an asset increases on the debit side. So anytime we're receiving cash, we're always going to debit cash. So we have cash. We're going to leave the post reference column blank, and we have cash of $18,000. Give me a second. I'm going to make this column be commas with no decimals. There we go. Okay, so that is our debit. We always list our debit first, and our debit is always all the way out to the left-hand side. Now, for every debit, we have to have a credit. Okay, our equation has to balance. Debits have to equal credits. Okay, so we have an $18,000 debit to cash. If we look at our problem, Jay transferred cash from a personal bank account in exchange for common stock. Okay, so if we look at our chart of accounts down here at the bottom, we see that common stock is an actual account name. And common stock is also one that increases on the credit side because it is an equity account. Okay. We are going to increase, we're going to indent the word common stock, okay? Just to show that that is the credit, that is the second line of our entry. So we've debited cash because we've earned cash, we've received cash for something, and we've credited common stock because that is what we gave to Jay. Okay. Now, second entry was on October 4th. We paid rent for the period of October 4th to end of the month for $3,000. Now here, we are not receiving cash, we are paying cash. So in the first entry, we received cash and we debited it. In this case, we're going to credit cash because we're paying cash. Now, we always list our debit first. So we need to figure out what that is. Paid rent for the period of October 4th, which is the date of this transaction, till the end of the month. So if we come down here to our chart of accounts and we paid our rent. So if we scroll through these, we've got prepaid insurance, not what we're looking for. Okay, we paid our rent, and here we'll find account number 53 is rent expense. And we know that our expenses are debited. Okay, again, we learned that in the PowerPoint. So we're going to list our rent expense, which was $3,000. And we said before our credit is cash because we paid cash for $3,000. If you are handwriting this, you would just automatically indent that when you write it. On the computer, it takes a couple more steps. So again, paid rent for the period of October 4th to the end of the month. We debited rent expense and we credited cash. Okay, October 10th, we purchased a used truck for $23,750. We paid $3,750 in cash, and we're giving a note payable for the remainder. Okay, first we paid cash, so we know we're going to credit cash. Note payable is a liability, and liabilities increase on the credit side. Looking at our debit, we purchased a used truck. So we received an asset. We received a truck. And if we look at our transactions, number 18 is truck. Okay, and that one is an asset. We know it's an asset for a few reasons. Number one, we know it's something that we own. We know that that's the definition of an asset. We learned that in the PowerPoint. And for another reason, if we look at our account numbers, anything that starts with a 1, those are all of your assets. And truck is 18, so therefore it is an asset. We're going to say $23,750 is our debit for truck. It says we paid cash of $37.50, so that's going to be a credit. And it says we gave a note payable for the remainder. I'm going to let Excel do the math for me. Sometimes that's safer in my case. And cash and note payable are both of our credits. So again, I need to indent those. Excuse me. So as we work through these, you'll notice that we are just taking each transaction and breaking it down into our debits and our credits and listing them in the journal. Keeping in mind that our assets increase on the debit side, decrease on the credit side, liabilities and equity accounts do the opposite, and expenses increase on the debit side just like an asset. Okay, so continuing on, number 13, we purchased equipment. Okay, so equipment is one of our accounts. On account for $10,500. Now it says the words on account. It doesn't say we paid cash. So we're not going to touch cash at all. Okay. On account means we have not paid them this amount. It means we owe them this $10,500. So that's where our accounts payable is going to come in. Accounts payable is a liability account. It is there to keep track of money that we owe to other people. Okay. October 14th, we purchased supplies. Supplies is our asset that we're receiving for $2,100. And we purchased supplies for cash. So we paid cash for those supplies. So just a basic debit to supplies, credit to cash. On October 15th, we paid annual premiums on property and casualty insurance, $3,600. If we look at our chart of accounts, We have right here number 14, which is an asset prepaid insurance. How did I know to use that one? Well, the transaction talks about paying those premiums on our insurance. So we're going to go prepaid insurance. It says we paid them, so cash will be our debit. Let's try to see if there's a keyboard shortcut, but there is not. October 15th, received cash for a job completed, $89.50. Well, we like to receive cash, so we're going to debit cash. That's fantastic, $89.50. And anytime that we do any work, if we look at our chart of accounts and we come down here and we find our revenue accounts, start with the number 4, and that one is called fees earned. And that fees earned account is there to keep track of any money that we have earned in the process of doing business. Okay. Those revenue accounts increase on the credit side, so we're going to credit that revenue account for $89.50. Okay, and that is page 1 of our journal. Let me just go through and make sure I got them all. It looks like I did. So page 1 of our journal. Okay, looks like I have a couple too many lines here. Okay. Now we're moving on to page 2 of our journal. And again, the top of our journal needs to have the date on it. So we do the 2014 October and make that one a little bit taller so we can see it. Page 2 of our journal, we're starting on October 21st. Paid creditor a portion of the amount owed for the equipment purchased on October 13th. So on October 13th, we purchased equipment on account. And if we look, we credited accounts payable. Now we are paying a portion of that amount. So we need to remove, what does it say, $2,000 from this accounts payable credit. Now, accounts payable increases on the credit side. It decreases on the debit side. So we are going to debit accounts payable for that $2,000. And it says we paid the creditor that amount. So we're going to credit cash for $2,000. Okay. Keeping in mind that we did not, under any circumstances, do anything to the word equipment. We did not touch that account at all. We recorded the receipt of equipment right here on page 1. Now we're recording partial payment of that equipment. Okay, it has nothing to do with the asset account. On the 24th, we recorded jobs completed on account and sent invoices to customers. Okay. Now, the previous transaction, we talked about accounts payable. And accounts payable is there to keep track of money that we owe others. We also have, under our assets, number 12, accounts receivable. And accounts receivable is there to keep track of money that people owe us. Okay. So in the case of the 24th, we recorded jobs completed on account and sent invoices to customers, which means we did not receive any cash. Okay, we went out and we did work for someone and we gave them a bill. We did not get their cash. We have received nothing from them for doing that work. Okay, so this $14,150 becomes an accounts receivable because they owe us money. So accounts receivable is there to keep track of people who owe us money. Now, they owe us money for work we have accomplished. So we're going to credit fees earned to show that we did that work. We just haven't been paid for it yet. Okay, on the 26th, we received an invoice for truck expenses to be paid in November. Okay, notice the words to be paid. We have not paid them yet. We do see the word truck expenses, and if we look at our chart of accounts on number 55 is truck expense. We know that our expenses increase on the debit side, so that's going to be our debit, truck expense for $700. We have not paid them yet. We owe them that amount of money, so we're going to credit accounts payable for $700. And I'll be honest, the more journal entries you do, the more they will start to make sense and come to you naturally. 27th, we paid utilities expense. Utilities expense is one of the accounts that's listed in our chart of accounts. So utilities expense for $22.40, we paid it, so cash for $22.40. Again, whenever you pay cash, you're going to credit it. Whenever you have an expense, you're going to debit it. Okay. Also on the 27th, we paid miscellaneous, oh, I spelled that wrong, miscellaneous expenses for $1,100. We paid them, so cash for $1,100. On the 29th, we received cash from customers on account. Oh, we received cash, so we know we're going to debit cash. In this case, for $7,600, we received cash from customers on account. That means that right here on the 24th, where we had debited this accounts payable, we had said customers owe us $14,150. Now on the 29th, we are receiving cash from customers on account. That means that this amount is going to come out of accounts receivable. Okay, so again, we debited it to increase it. Now we're going to credit it to decrease it. My mouth stopped moving for a moment. Didn't quite have enough lines here. Give me just a second. See if I can make, no, I thought maybe I can make that column increase by doing that. 19.5. There we go. Okay. Oh, I thought that would make them all go. Oh, there we go. Okay. On the 30th, we paid wages of employees. Paid wages of employees. So if we scroll through our chart of accounts, we find 51 is wages expense. Okay, so we have our date, wages expense, and the amount was $4,800. We paid it. So we're going to credit cash for $4,800. Let's make these our little commas with no decimals. Oh, and increase our cash indent. And number 30, on the 31st, we paid dividends for $3,500. Okay. So if we look through our accounts, we see dividends there is number 33. Dividends does increase on the debit side. And we paid them. So we're going to credit cash for $3,500. Indent those. Now, at the very beginning, I said your debits and your credits always have to equal. Now, we have extremely simple journal entries that we're looking at right now. So we can go through and we can look and make sure that our numbers each have a matching number to go with them, right? We can see that these numbers are all the same. We can do the quick math here and see that those are equal. If you had more complex journal entries, multi-lines, like some journal entries have 3 or 4 lines and there's different amounts on the left and on the right, you could run a total column here. And I'm just going to do one quickly here for the first one. And again, I'm using Excel's features. I just added those up and then drag that over and it adds those up. So we can see very quickly that our debits and our credits do equal. Again, with our simple journal entries, you can see it at a glance. But if you needed to run just a quick total just to make sure, you could do that as well. So that is step 1, that we journalized each transaction. Okay. Oh, come on, video. There we go. Step 2. Post the journal. Somehow I downloaded something. Post the journal to a ledger of 4-column accounts, inserting appropriate post references as you go. Okay, so what we're going to do is down here, you'll see a tab that says Ledger. Okay. Now, this is where doing things on paper is a little bit easier than doing them on the computer because you can have two pieces of paper side by side. I am going to kind of cheat on this one a little, and I'm going to open a second document just so that you can see. No, never mind. I am not going to do that because it's not going to let me. Excuse me. What we're going to do is we're going to take everything from the journal, starting at the top, and copy it into the ledger. Okay. This is where those of you who cheated in high school will be very good at this. Okay. We are literally, I'm joking, we are literally copying things from one page to the other. Okay. So let me explain this. So October 1st, we had a debit to cash, and we're going to take this one line at a time. October 1st, debit to cash for $18,000. I'm going to come over here to my ledger. My first account is cash, so I'm going to put in my date, October 1st. I was on journal page 1, so that goes in the post reference column. I had a debit of $18,000, which makes my balance a debit of $18,000. Okay. Again, I just copied it over October 1st. This is the page number of my journal, 18,000, copied over to 18,000. I'm now going to take this number 11. I'm going to go back to my journal, and in the post reference, I'm going to type in that number 11. So it's a checks and balances. It shows in the post reference column of my journal, number 11 to show that I did post it to account number 11. And in the ledger account, in the post reference column, it shows number 1 to tell me what page number that transaction came from. So if I had to look it up again, I could. Why are we doing this? The why behind this is because your general ledger keeps track of the balances of your accounts. Okay. Now, in a normal accounting situation, this would be done on a daily basis or multiple times a day. So at any point, you could look and see what is the balance of that account. Okay. In our situation, we're doing it at the end of the fiscal cycle. Fiscal month, I guess, is what we have been using. So now I'm going to go through and do this line by line. The next one is common stock on October 1st, and it's a credit of $18,000. So I'm going to scroll until I find common stock. Again, you have to put in the month and the day on each one. It was a credit of $18,000, which gives me a balance of $18,000. Oh, I forgot what that was. Common stock is number 31. Fourth, rent expense, debit of $3,000. So I'm going to find a rent expense on the 4th was a debit of, I have a very short memory, $3,000, which gives me a balance of $3,000. Number 53 goes back there. A credit to cash of $3,000 on the 4th. So I'm going back to cash. 4th, page 1, $3,000. Okay. This is where it gets different. Okay. So this balance column is here to keep track of the balance of your account, right? So here we had a debit of $18,000. We are now crediting the account for $3,000. So we need to subtract those two numbers. So I'm going to have Excel do it for me. I'm sorry, let me try that again. I'm going to have Excel do that for me. We now have a debit balance of $15,000. Okay. We had a debit of $18,000. We had a credit of $3,000, which means I'm going to subtract them because they're different. Gives me a debit balance of $15,000 because when I started, my debit was bigger than my credit. Okay. Again, when I started, my debit was larger than my credit. So I land with a debit balance. Okay. This is number 11. So back to my journal. The next one is the 10th. We bought a truck for $23,750. So we're going to find truck. Now you'll notice that this one says truck/van. I think it was 23,750. And the reason for that is for this step-by-step problem, it's called a truck. For your assignment, it's called a van. And this way you can use the same Excel spreadsheet for both. Yep, 23,750, and it was number 18. Here on the 10th, I had a credit of cash of 37.50, so I'm going back to cash. It was the 10th. It was 37.50. This one's going to equal 15,000 minus 37.50. Again, I'm having Excel do the math for me. You are more than welcome to do that using a calculator or in your head, whatever works best for you. I had a note payable for $20,000 on the 10th, so I'm going to go find notes payable. And again, the very first line of each one has to have that year on it. Oh, that's too many zeros. Okay. That is account number 21. 13th, equipment, 10,500. Okay. Account number 16. Accounts payable, 10,500 on the 13th. And that is number 22. On the 14th, supplies, 2,100. Debit of 2,100. Okay. Count number 13. On the 14th, a credit to cash of 2,100. Oh my goodness. There we go. Okay. So you can see as we do this, we're keeping a running total in this balance column. On the 15th, prepaid insurance had a debit of 3,600. And a credit to cash of 3,600. On the 15th, cash had a debit of 89.50. Okay, so here's where things are a little different. We're in the debit column. We're still running this debit balance. Instead of subtracting, I'm going to add my debit because they're both the same. So when you have the same, they're both debits, you're going to add them together. When they're different, a debit balance and you have a credit, you're going to subtract them. Okay, in our case, they were the same, so we added them, which is great because we were getting down there. We only had $5,000 left in our cash account, and we had some income come in, which is what we want to see as a business. On the 15th, we credited fees earned for that $89.50. Not sure why that whole line is bold, but we're going to go through and unbold it. Oh, I forgot my number. Where am I going here? 41. Okay, so that is the end of page 1 posting. Now I'm going to scroll down and I'm going to do page 2's posting. On October 21st, accounts payable debit for $2,000. So I'm going to go to accounts payable. I already have the month and day in there, so I can just jump right to here. My post reference is now going to be a 2 because I am on page 2. And a debit of $2,000. So again, here we're in the credit column and we had a debit, so we're going to subtract them. Our credits and our debits are not the same, so we're going to subtract that credit minus the debit gives us a credit balance of $8,500. So with that 8,500, we're then going to take that 22 back to our journal, just like we did page 1. Okay, a credit to cash of 2,000 on the 21st. Page 2, credit of 2,000, and again, we're going to subtract because we have a debit balance and we're subtracting that 2,000. Taking that 11 back to my journal. On the 24th, a debit of 14,150 to accounts receivable. And the amount for that matter, 24th, 14,150. Okay, and our account number was number 12. On the 24th, we had a credit of fees earned of 14,150. Okay. And that is number 41 back to our journal. Oops. A debit to truck expense for 700 on the 26th. And that's number 55 back to our journal. A credit to accounts payable on the 26th. So again, these are both credits, so we're going to add those numbers. And that is number 22 back to our journal. A debit on the 27th to utilities expense, $22.40. And that's on the count number 54. A credit to cash on the 27th for $22.40. So our debit minus our credit. Taking 11 back to our journal. On the 27th, a debit to miscellaneous expense for $1,100. All right, I did that one a little bit backwards. I was losing the numbers in my head as we went. 59. And a credit to cash on the 27th for $1,100. Again, subtracting our balances. On the 29th, we had a debit to cash for $7,600. Since we have a debit balance, we're going to add those two numbers together. And we had a credit to accounts receivable for $7,600. A debit balance minus our credit gives us a new balance of $6,550. We have a debit to wages expense on the 30th for $4,800. And our account number is 51. Again, I apologize for doing that backwards. Sometimes my brain isn't as strong as it used to be. We have a credit to cash for $4,800 on the 30th. We're going to subtract those two because one's a debit and one's a credit. These little inconsistent errors are coming up because we were subtracting. All of a sudden we added. And sometimes Excel's like, hey, are you sure that's what you wanted to do? Because that's not what you've been doing. On the 31st, we had a debit to dividends for $3,500. And it's 33, back to our journal. And cash, we had a credit on the 31st of $3,500. Okay. Now, a couple questions that you probably have. Couldn't I just go through the journal? Oh, you know what I didn't do? Don't forget the last post reference. Couldn't I just go through this journal and do all of the cashes and then go back through and do all of the common stocks and back through and all of the rent expenses? Wouldn't that be faster? It might be faster, but it won't be as accurate. Okay. By going line by line, you're sure to catch every single one and you're not misplacing numbers because all of the numbers above have been filled in. Okay. Another question that people have asked me is, can I go through and put the month and year in here on each one instead of doing them as I go? Because I go to put that in, then I can't remember the rest of the numbers, which is what I was doing. You can, but there may be a situation where you put that month and year there and then you don't actually use that account. Okay. And in that case, you need to go back and take it out. You'll notice that in the case of your ledger, you had the exact number of spaces that you needed. So if you have any empty spaces, you need to go back through and figure out why. And I did that on purpose, just as a learning tool to help you find your mistakes as you go. That won't always happen. It will happen for this chapter, but that won't always happen. Sometimes I'll give you an extra space here and there just to kind of make you think and make you look back. But for this chapter, I did give you the exact number of spaces you needed for that. Okay, let me pull up the problem. The problem says, that was step 2. Step 3, prepare an unadjusted trial balance for Pioneer Designs as of October 31st. Okay. An unadjusted trial balance, which is this other tab here, is simply a list of the accounts and their final balances. Okay. It's simply a list of your accounts and their final balances. Give me just a second. Let me find my unadjusted trial balance that I did on paper, so I can make sure we've got the right balances as we go here. Okay, so what we're going to do on our unadjusted trial balances, we learned in chapter 1 that every report we do starts with a 3-line heading. Okay, and the first one is going to be the company name, which in this case is Pioneer Designs. Our trial balance is a snapshot in time. It says this is the account balances as of this moment. So instead of doing for the year ended, it's much like that balance sheet that we did. We're just going to do the date, October 31st, 2014. Now, we're going to go through our ledger and pull our account titles in order and just list them. So we know our first one is cash. We know it's number 11, and we know this because it says it right here on our ledger. The first one is cash, and it is number 11. We know that it has a debit balance of $84.60. So we're going to list $84.60 right there. And our next one is going to be accounts receivable, number 12, $65.50. So accounts receivable, I always spell that wrong. Receivable, number 12, $65.50. Supplies, number 13, $2,100. Beautiful. Prepaid insurance, number 14, $3,600. Equipment, 16, $10,500. Okay. Our truck and van, number 18, $23,750. Sorry, sometimes when those numbers are a little, and here I'm just going to put truck because that's what we're using for this one. When those numbers aren't whole numbers, I forget them a little bit faster than others. Notes payable, 21, 20,000. Oh, notes payable was a credit, not a debit. So if you look at my ledger, 20,000 was in the credit column. I accidentally put it in the debit column. Accounts payable, 22, credit 9,200. Whoops. Okay, our next one is common stock, 31, credit of 18,000. Oh, credit. Okay. Dividends, 33, debit of 3,500. Fees earned, 41, credit of 23,100. Do this one backwards. Just because I know me. The next one is going to be wages expense, 51, a debit of 4,800. Rent expense, 53, a debit of 3,000. Utilities expense, 54, a debit of 2,240. Truck expense, 55, a debit of 700. Miscellaneous expense, 59, a debit of 1,100. Okay, expense 59, 1,100. Now, the last line here is where we're going to put in our totals. So we are going to add up each column. Again, I'm using Excel to do my math. By putting my mouse down here on the bottom right-hand corner, it turns into a black fill handle. And if I drag it over, it will automatically move the formula from this column to this column. Now, if we look at our numbers, they're equal, which is exactly what we want, okay? A trial balance has to balance. That's the whole point, to make sure after everything you've done, your debits and your credits are equal. So since we know they're equal, we need to show that we've done some math. So I'm going to put a thick bottom border on the cells above, and we're going to do a double underline. Okay, a bottom double border is what Excel calls it. So we're going to put our double underline under here to show that we have checked this and it's equal and life is happy in the world of accounting. Okay, if you have any questions on this problem as you're working, please be sure to ask. Please be sure to contact me. Give me just a second and let me find the right screen here. Nope. Oh, here it is. So over here on the left-hand side, you have an inbox button. So please be sure to contact me via that inbox button if you have any questions. Have a great day.